SBI would most likely exhibit weakness in margins and asset quality in its Q4 FY13 numbers. We are expecting advances to grow by 18%, deposits to grow by 14%. CD ratio is likely to inch up as we are expecting that bank would continue to deploy the surplus liquidity on the balance sheet in the current quarter for growth. CASA is also likely to move up as we had seen in most of other PSU banks. As said before, NIM would likely remain weak in the quarter. The weakness essentially would come from the domestic business. We're expecting domestic NIM to fall by 10 basis point to 3.5%. It will be a low for the bank for the past 6-7 quarters. And the pressure on the margins would essentially be caused from lower base rate and also product specific lending rates were lowered by SBI in segments of retail as well as SME. And possibly also the pressure could come from interest reversal on the stress assets created during the quarter. NII is expected flat on a YOY basis at 116 billion given the fact that margins have actually come off significantly in the past 12 months. Asset quality would continue to mark the deterioration trend seen in the previous many quarters. We are expecting fresh slippages to be around 80 billion in the quarter, implying a delinquency ratio of more than 3% on an annualized basis. So the gross GNPAs would likely inch up further to 5.5% levels at the end of the quarter. So the credit cost we also think that would remain elevated at about 100 to 110 bips for the quarter annualized. Overall, we are expecting PAT at around 38 billion, which implies a 7 to 8% decline on a YOY basis.